I'm joined by Tom Koczwara, Director of the DMO Office at the Government of Sharjah in the UAE. Thank you, Tom, for joining us.
Thank you very much.
When you launched your 7-year Sukuk deal earlier this year, you simultaneously launched a tender offer for some of your existing securities. What was the rationale for that?
So we had a $500 million outstanding 2021 maturity Sukuk as well. And we also have our 3-year Panda bond that we did last year maturing, and that's another 2 billion yuan in 2021. So we have been thinking, how do we manage down that maturity spike that year? And I think the liability management exercise is not such a common tool in the Middle East, but we thought we would give it a go. So we launched the tender exercise. We gave investors the chance either to swap the existing issuance for the new one or to simply offer to sell it back to us. And we said we would give preference to those who were swapping into the new issuance as a way of helping us to build demand for the new issue. Now, as it turned out, everything went really well with the new issuance. We got $1 billion out and had a book of over 4.2 billion. So we didn't really need that extra demand, so we took up all of the tender offers, both the swaps and the sellbacks, and that came to about 35%, 36% of the existing issuance.
You've recently been added to the JP Morgan MB Index. Obviously that increased the potential investor group for your bonds, but are there any potential negatives from inclusion?
Well, I think the potential negative you could point to is we will be bringing in a new set of investors, and they may not be so attuned to the local factors that our normal investor base would be looking at when they're thinking whether to buy or sell Sharjah Sukuk issuances. To us, I don't think that's likely to be a big problem. You know, it's additional benefit that we're getting. If the worst case scenario is we don't get that additional benefit, that doesn't seem like such a bad thing.
How do you choose whether to go to the debt capital markets or something else?
That's a very good question. So for us, I think it's important to have a balance. You know, we certainly, as our debt portfolio has grown, we've looked to draw on diverse sources of funding, and we try to tailor it towards the exercise that we're doing. So if we're looking at one of our government-related entities and they're funding a particular project, we may well find that either we want to bring in private capital through a PPP type structure, or we want to do a project finance that helps the project economics, or we might find if we're importing a lot of content from overseas that it's suitable for export credits, and that might be the most efficient funding structure. Generally at the government level, we find that loans, bonds, Sukuk, this is the kind of space where we see the best value. And the balance between those will be to do with, firstly, price and other commercial terms, but also about how we manage the relationship with our financiers, our lenders and our investors, to try and keep them committed to us and there for us whether times are good or not so good.